Let's hit that Meta story today, because we didn't get to it yet. That first of its kind nuclear power deal. Meta's had a great run of its own. I think it was up around 18% in the month of May. Pippa Stevens is here with us at Post 9. It's good to see you. This is a really interesting deal. Tell me more.
Yeah, Scott. So this is Meta's first nuclear deal, and the company will buy all of the power generated from Constellation's nuclear reactor at the Clinton Clean Energy Center in Illinois as part of a 20-year agreement. Now, the plant had been in danger of closing, but this deal gives Constellation the certainty and the money to invest in the plant and even possibly add another reactor. This is just the latest instance of big tech teaming up with nuclear. Driving these deals is, of course, AI's insatiable need for power. Alphabet and Amazon are backing small modular reactors, while Microsoft signed an agreement last year to restart 3 Mile Island. Now, Constellation is well off its highs after rallying as much as 15% earlier. Segra Capital's Arthur Hyde said it could be due to the lack of price disclosure for the deal, adding it's been a very crowded trade here. But, Scott, the bottom line is that this is likely not the last deal of this kind that we're going to see.
Pippa, thank you. You stay for the conversation, too. So you're a huge believer. This, to me, is more of the power play side of rather than the mega cap side of. So rather than trade Meta, I'd rather trade the Eatons and the Quantas and the Vernovas and the Constellations and the Vistras, which you just bought Vertiv today, correct?
Yeah. So in the quarter, the hyperscalers' free cash flow fell 11%. Collectively, because they all spent so much money on AI, and they're going to spend, we've talked about this many times, $300 billion plus this year alone, up 40% on AI. Many of these companies are doing power deals, as Pippa just mentioned. We also have NRG. They bought 18 natural gas power plants. We had Blackstone, private equity, get into the mix in New Mexico in their utility purchase. So you're going to see many more of these, in my opinion. And it all has to do with, if you believe, and we've talked about this, there are 4 themes within the big theme. It's AI, you need more data centers, you need to upgrade the grid, and you need power. It's all those kinds of same themes, and you can play it any way you want, Scott. And I have chosen to play it on the industrial side because I think that actually is my favorite theme for the next 10 years. But I think maybe they're over-owned, but they're not as owned as something like NVIDIA. So Eaton said that there are 1.7 trillion mega projects out there that are ready to be built. Only 16% have started. There's going to be $4 trillion of spend on electrification between now and 2050. 70% of the grid is over 25 years old. All of the companies that you mentioned had record backlogs and strong margins. So you could play it any way you like. Vertiv I picked because it's down still 23% from its highs. I'm shocked this thing isn't up 10% today. I'm shocked actually the whole group isn't up more, but this company has a total addressable market of $52 billion. They're an end-to-end solution provider, so they capture a lot of various different customers. And I think that they are going to outgrow the industry, which is going to grow about 9 to 12% compounded annually. They're going to outgrow the industry 300 to 500 basis points. Very strong margins. And Dave Cote is the executive chairman. We all know what he did at Honeywell.
Right.
And that was the other reason why I bought the stock.
Joe, you own Constellation and Vistra, too.
Yes. The independent power producers are right now in the sweet spot in what you're describing. And that is really where, Scott, the M&A is unfolding. The M&A is actually happening from companies like NRG, Constellation, and Vistra. They are out there acquiring assets because they understand there is this incredible need for power related to AI.
And to that end, you'll probably be reporting on this sort of stuff more often. This is just, and not that this is the first deal, but it's likely, as Steph said, to lead to many more companies thinking about the same type of thing.
And what's interesting here is that this is the first deal with an existing, already operational reactor. And I think what it shows is that that time to market, the premium for existing power, is what's so valuable now. And so for the IPPs like the Constellations, the Vistras, the NRGs, they have that opportunity to capitalize with existing assets, because while there is so much buzz around SMRs, that's really a 2030 and beyond story. What data center companies need is power right here, right now, and that's what these IPPs offer.
All right, Pippa Stevens here at Post 9 with us. Good to see you. Thank you.